Hey guys, welcome back to another week of fundamental analysis. From the 9th to the 15th, I am in a trade currently. I will go through the trade after at the end of the video. For now, let's go through our fundamental analysis and see what's going on in the markets. So, data point wise, we had inflation readings, so CPI and PPI. CPI was sort of neutral readings. PPI was higher than expected, but was revised down from last month. So this reading here, look, honestly, the bearish nature change of gold and the bullish nature change of oil, I'm not really confident in this. I'm reading more so individually what's going on regarding my economic news. So really, can't really use this slideshow in too much detail. I forgot to mention COT report. For the things that we're trading, it is bearish on oil, even more so from last week's reading. Gold hasn't really changed, silver hasn't changed. US 30 is slightly bullish. We did miss a trading opportunity. It wasn't within my I was asleep essentially, plus the setup wasn't there, but we'll talk about US 30 after towards the end. Like I said, data point currently used, but we can use the actual fundamental analysis. So in terms of the pound, again, I'm not trading this, but just good to know. You can see claimant count was revised down, and it was the actual amount 23,000 is significantly lower than the forecasted 95k, so quite a bullish sign on pound. However, in terms of average earnings as well as GDP numbers, you can see lower than expected or cooler than expected numbers, supporting the idea of rate cuts for the pound, in the sense that earnings and their GDP numbers, there's not much stimulation in the economy, the need for rate cuts. Even though the claimant count was, I guess you could say, a bullish stance, overall it's still quite a bearish. So if I was looking at the pound against the dollar, well, you'd have to factor the dollar. So look, I'm not trading pound, I'm just keeping up to tabs with everything. We could add it in the future, we'll see. Now USD, we had CPI on Wednesday, we had PPI on Thursday. Let's go through CPI. So CPI was as expected for month on month, year on year. Core CPI was slightly higher than expected at 0.3%. And then we go to PPI. PPI was revised down for both core PPI and normal PPI, but it was hotter than expected for forecasted. So 0.3 compared to 0.2 for core PPI, 0.2 compared to 0.1 for PPI. So what I've written down is just a reminder for myself that the Fed meeting is next week on September the 18th. We're confirmed that it will be a rate cut, whether it be 25 or 50 basis points. That's the toss-up. Using this data, most likely it'll be the 25 basis point cut. Inflation numbers are going down, and it's said that CPI has been, from a year-to-year basis, has been the smallest annual increase since February 2021. So the higher rates have done its work. We're heading towards the 2%. We're not there yet. It's still sort of fizzling, and the fact that we've got hotter than expected PPI and core CPI numbers sort of suggests maybe a slight stagflation concept still roughly around. So which is obviously bullish for gold, and that's the stance I'm taking, and that's a trade I've actually got. Now, just again, with the euro, I'm not trading it, but just to know, the ECB press conference, was a rate cut, so we got a rate cut from 25 basis points, and Lagarde, I think that's how you pronounce it. She's the bank president. States that the next rate cut in October or November, whatever it might be, that it would be data dependent. So depending on what the data says or the data says, the ECB will sort of arrange their rate cuts accordingly. So she states that we are not pre-committed to a particular rate path, so we can't really gather too much in terms of is there going to be a cut, but we just know, you look, all the currencies are cutting their rates essentially right now. Next week's data, the most important thing I'm going to look at is Fed rates, also pound rates. Very interesting to see what goes on. Take home message, again, still bullish on gold, even more so with the stagflation concept now sort of at hand. Oil, look, I haven't won an oil trade at all. I'm not really confident in oil. I'm just going to put that on a pause for now. US 30, I'm still bullish US 30, with the rate cuts coming especially, so still with this stance. Now let's actually go on the charts and let's just show you what's going on. So trade I'm in right now for gold. So this was, still from last week. I've held, you can see we've pushed up. I've marked this resistance as a potential re-entry area. We're going to keep the stop loss right here, and I will look to trail if it bounces up. If it goes here, I'll look to enter another position with half a percent stop loss, probably under here, and look to go up again. So that's my trade idea for gold. US 30, we missed an opportunity on US 30 here, and again, I was asleep at night, but you can see this was marked up. I had an alert set. You can look at my videos last week. If I actually would have got tagged in, you can see it went up by around 4.3%, but you can see how the candle just reverses away from the zone. I would have preferred it if the candle actually closed here, right, paused here, and then I would have taken an entry there, stop loss here, and go up for that. But that's all good. Now in terms of US 30, what I want to see, because I've lost that entry there, it's already respected this area here, right, on the daily. Because it's respected that, it's obviously semi-broke that, but I'm really looking to see if we can get a retest from here. A breakthrough and a retest. Then I could potentially look for an entry here, if fundamentals are all good, especially if we get a nice rate cut and the market spikes ahead, we can get through there. So that's still on my watch list. In terms of another currency to add, I might add this. I'll pop it here, AUD USD. The reason why I'm choosing this is obviously I'm from Australia, so I kind of know what's going on in my economy and how things are. I know with the Aussie, our cash rates, they're still not budging. They're still quite high. I'm not sure about inflation numbers. I'll have to re-look at the inflation numbers for Australia, but this could be another pair to trade. It's again my win rate with oil. If we have a look at my actual trading, let's have a look at oil. So we lost one here in June, lost one here in July, lost one here in August. So we have 3 losses for oil. In terms of gold, we have 2 wins here, 3 wins, a loss here, a win here. So we had 1 win, 1 loss, 2 wins, 1 loss. Right, hold on. 2 wins, 3 wins, 1 loss, 4 wins, 5 wins. 5 wins, 1. Sorry, this is not it. So 4 wins, 1 loss is 80% win rate with gold so far. 0% win rate with oil. So look, we might take that out. We might replace it with US 30 and Aussie dollar. But for the time being, that's what it is, guys. I'll catch you next week.